The Korean won has seen a dramatic rebound recently, pushing the US dollar exchange rate down by over 171 in less than 2 months. Now, for a deeper look into what's driving this rapid currency shift and how it's affecting global asset markets, our economics correspondent Park Junan joins us in the studio. Welcome back, Junan.
Good evening, Tammy. It's good to be back.
Junan, the won has seen a pretty dramatic rebound recently. Could you first break down the numbers first, and what's driving this sudden shift?
Right, Tammy. So today I brought some props, a US dollar bill and a Korean bill. So this $100 bill has lost 12% of its value against the won in just a couple of months. That means my 50,000 won bill has gained 13% against the greenback. According to data from the Bank of Korea, the exchange rate peaked around the 1,550 to 61 level between May and July, but it has now dropped significantly to hover in the 1,381 range. A primary driver behind this shift is domestic companies actively converting their dollars into Korean won. And among them, the big market mover was Korean tech giant SKhainik's. In July, SKhainik's raised $26.5 billion through an American depository receipt listing, with billions of these dollars flowing directly into the domestic foreign exchange market for reinvestment here in Korea. It has effectively helped cool down the recent dollar price hikes. And it is not just SKhainik's. Other major exporters in the semiconductor and shipbuilding sectors are converting their overseas dollar holdings into won, which helps bring the exchange rate down. Monetary policy also played a crucial role. In a rare move, the Bank of Korea has raised the country's benchmark interest rate for a second consecutive month from 2.75% to 3%, taking preemptive action to contain inflation. The widened yield gap between Korea and the US has now narrowed to 0.75 percentage points, effectively making the Korean won stronger than it was a few months before.
Well, we've also seen a massive shareholder return announcement from tech giants like Samsung Electronics and SKhainik's recently. How significant are corporate payouts actually contributing to dollar selling and helping cool down the high foreign exchange rates?
Right, I mean, as just mentioned, both Samsung Electronics and SKhainik's have announced massive shareholder return programs in recent weeks. Samsung Electronics plans a share buyback and cancellation program worth between 90 trillion and 110 trillion won. SKhainik's is also stepping in with a 40 trillion won stock repurchase and cancellation plan. While it is unclear how much of the dollar proceeds will actually be converted into won for shareholder returns, these plans worth a combined 150 trillion won could further strengthen the won. Let's take a listen to what an economics professor had to say.
Whether the money comes back as dividends or is reinvested domestically, it ultimately has to be converted into won. So what matters is not the percentage of dividends, but how much profit is actually brought back into Korea and converted into won.
One thing is clear: billions of dollars will flow into Korea's foreign exchange market.
That's good. Well, then the question is, why is the dollar weakening, and why are the assets like cryptocurrencies and commodities rising?
Right, so weakening confidence in the greenback is pushing capital into alternative assets like gold or Bitcoin. A major catalyst behind this rally was the U.S. Treasury Secretary's announcement to expand long-term debt buybacks. Higher Treasury yields usually support the dollar, but if yields rise because of fiscal concerns rather than stronger monetary policy expectations, the dollar can weaken instead. However, an economics professor said there are many variables that affect swings in currency. Let's take a listen.
Interest rates do affect exchange rates, but it's not a one-to-one relationship. Other factors have to remain the same for that relationship to hold. With oil prices rising and the war in the Middle East dragging on, I think concerns have grown that the US dollar's influence is less than what it used to be.
As the US dollar weakens, the value of what are considered alternative assets has risen. Bitcoin recently broke past $80,000 for the first time in over 3 months, touching $81,257 amid short squeezes and massive spot ETF inflows. International gold prices also rebounded from below $4,000 in June to surpassing $4,620 per ounce as of Thursday. Ultimately, an excessively high exchange rate burdens the domestic economy by driving up import prices. That is why financial authorities have been stepping in to cool down the overheated market.
A volatile market is what I could definitely say, Junan. Thank you for the breakdown tonight.
Always a pleasure, Dami.